Now that you understand the difference between direction and path, we move on to how the markets actually move and why they do what they do. So at this point, we introduce the concept of market phases. You need to understand at all times and on all time frames what phase is the market in. It can only be in one of these phases. Broadly, if you break it into two, it can be consolidating or trending. So it can be in accumulation, markup, distribution, or markdown. There is nothing else. It's either in an accumulation, markup, a distribution, or a markdown. There are 4 market phases. That's it. It either goes sideways, it goes up, or it goes down. So taking that, you want to view it from the highest time frame possible, first of all. The higher the time frame that we're in, the better you can trade on the lower time frames. Highlight this with an example. Here's a perfect example from Bitcoin in that exact scenario. We had an accumulation, a markup, a distribution, and a markdown over the course of around 10 months. Within that offered amazing opportunities for the traders who understood when it was in a range, when it was in a trend, when it was distributing with a high probability, and when again it was in a trend. Because there's 2 different types of trading: trend following and mean reversion, which will be covered in a lesson coming up very soon. Understanding this is crucial to your success as a trader. And this is on a 1-week chart, but this same structure plays out on a 1-minute chart, a 1-hour chart, a 1-day chart. It doesn't matter. Markets are fractal in nature. So being able to spot this and identify this, and identifying the phase within the phase, meaning identify within the trend, within the markup, when it's also trending on a lower time frame, then you get double confirmation, you get the strongest trades. To cap this off, it's important to not just look at this and think that every time it does accumulate a markup that it has to distribute a markdown. No. It can move like this in both directions. It can go accumulation, markup, reaccumulation, markup, reaccumulation, markup, distribution, then markdown. And in reverse, on a downtrend, it could go down, redistribute, down, before it finally goes into accumulation. But there are still only 4 market phases, remember. Accumulation, markup, distribution, markdown. Here we had accumulation, markup, accumulation, markup, accumulation, markup. Still 2 of the same 4 phases. Distribution, markdown. Keep that in mind. That's going to be your North Star, your guiding principle as a trader. That's the first step on helping you to identify what is known as trending or mean reversion environments, which is the very next lesson. We're going to talk about that. This is how you actually trade. Every strategy you do is very important. Every strategy you do will fall into one of these 2 categories. And if you don't pick the category correct, your trade cannot win. So jump through to the next lesson. Super important. Let's talk about trend following and mean reversion.